We're at the stage in the cycle where good economic data is bad for the market and vice versa. We'll talk about that and how being flexible can level up your trading. Okay, so let's take a look at the NASDAQ and how good economic data is bad and bad economic data is good. So this week we had two perfect examples of this. The first one on Tuesday, we got the JOLT job openings report that showed a 1 million drop in job openings. Most people would think that's not good for the economy, having a million less jobs, but to the market, it shows that the Fed's action of raising rates and quantitative tightening is working, and we're getting closer to the end of the rate hikes because the market is forward-looking, always discounting 6 to 12 months in advance. So on Tuesday, the market ended up over 3% that day. Now, if we fast forward to Friday, we had two major economic reports. We had the unemployment rate and then the non-farm payrolls. The unemployment rate came in lower than expected, while the non-farm payrolls came in above expectations. Again, you might think, wow, unemployment is low, that's great for the economy. But to the market, that means the Fed needs to keep raising rates aggressively to fight inflation. So coming up this week, we're going to get more economic data. We're going to hear from multiple Fed speakers, and the market's going to be dissecting everything they say and everything that's in those reports. Recently, all the Fed speakers have been on the same page saying they're going to raise rates, they're going to keep them higher, and that's their primary goal until inflation is down. So we need to start seeing worse economic data come in from these reports so the Fed can ultimately pivot, slowing down the rate of their increases, maybe even pausing and eventually leading to cutting. But with all that said, we're still in an attempted rally. So as you can see here, on Monday, we gapped up, and that's our day one of our rally attempt. Tuesday, we had the JOLTS report that we talked about. We pushed higher, and then Wednesday, Thursday, we consolidated these gains very nicely. The market was showing some pretty good strength. Friday, we got those other reports we talked about, the unemployment rate, the non-farm payrolls, and the market absolutely got destroyed, falling close to 4% that day. So we're still above Monday's low, which means the rally attempt is still alive. If we get a follow-through day, it could trigger at any point. Again, that follow-through day is a gain of 1.25% or more on an increase in volume from the previous day. So the market could keep going lower. We could get the follow-through day. We need to be open and ready for both scenarios. We need to remain flexible. So what do I mean when I say we need to stay flexible? On September 27th, I posted on Twitter saying, it looks like we may be getting the start of new bases. While the market makes its third leg lower, leaders tend to create proper bases. And I laid out three different scenarios for the trade desk, TTD, that I would be watching. So here was my scenario one, that double bottom base. However, this low this week undercut the second low. So we would now have a triple bottom, and just the symmetry of the structure doesn't look like it's going to be a proper double bottom base anymore. I could be wrong. We could just turn and rally and take out this middle peak, which would be the double bottom pivot. However, to me, it looks like we need a little more time to base, and we may get something closer to scenario 2, which could go on to form a cup or a cup with handle and look something like this. If that happens, that would be great. However, it's important that I remain flexible and open to the idea that price just keeps falling and needs a total reset. This one could also never come back and just be another stock that had its run and now is done. So we need to remain flexible. We need to be ready and have a plan for whichever way price moves and whichever structure or scenario we end up getting. Now, with all that said, let's go ahead and look at the individual stocks now that have been showing relative strength and are holding up well in proper basing structures that should be on our radar if the market does want to rally and maybe provide that follow-through day at some point this week. The first stock we're going to look at is Arista Networks, ANET. We still have this nice proper double bottom base structure forming. We have the relative strength line at new highs. And if we go into the daily chart now, we draw in the structure. We have the double bottom base. So again, this first low, we rally up, not quite to the previous high. We come down, we undercut this previous low, and now we're rallying up. We did get above the 50-day and the 10-week early in the week. However, on Friday, when the market came down, this came down with it. We filled this gap from the gap up. We closed below all the moving averages. So we need to watch this. It could just go down lower from here, or if we do stage a rally, I'm looking for this to get back above these moving averages, hopefully with some good volume, and then eventually this standard 126.70 double bottom base pivot. Moving on, Cross Country Healthcare, CCRN. This one broke out from a cup with handle base this week on enormous volume and made a new all-time weekly closing high. So we have the relative strength line at new highs here, beautiful basing structure, and a very nice breakout. You can see the volume accumulation as this right side of the base built, all these nice big blue bars, exactly what you want to see. So going into the daily chart, you can see that same structure. Here's the breakout. We pushed to new highs again, we kind of came back down with the market. However, on Friday, while the market was down 4%, this showed its relative strength again, finishing the day up 2.5% on an increase in volume again. Now, we formed a mini coil here. We have Thursday and Friday's bars nested in Wednesday's bar. So an aggressive entry would be breaking above this 32.16 high of Wednesday's bar. However, I'd be looking more to buy this on a pullback somewhere near this 21 EMA, which if I had to guess will be somewhere around 29.40, 29.50 early in the week. So that's what I would be looking for there. Okay, so next up is Double Verify Holdings, DV. As you can see, we had this very nice long multi-touch trend line, which we broke above on a nice increase in volume, and now we're working on a flat base. We're 4 weeks into it, it's 15% deep, and we're getting some nice tight closes. So as you can see, this first week we closed at 27.34. The next week we closed a little lower, but then we come right back. We closed at 27.35, and then this week at 27.17. So it's very controlled price action in that range. Something I picked up from Matt Caruso. He calls that tight in range. So Double Verify is holding up very well, forming that flat base. If we look at the daily chart, you can see we're finding support at this 10-week and 50-day moving average, just what we want to see. We'll see how this ends up playing out, but this one's holding up very well in a proper flat base structure. Next up is Mercado Libre, MELI. This one still has a very nice double base structure going. The relative strength line's not at new highs, however, it is moving in the right direction, and this has a very nice volume profile as most of the up weeks are an above average volume. You can see that down here, and the weeks that close lower are on lighter or decreasing volume. If we move into the daily chart, you see the same thing. Nice increase, green volume bars down here. Very nice structure. We came down. We rallied up, not to the new high. Came down, we undercut this 8.1246 just barely, and now we're pushing up that right side. We got denied here at the 200-day moving average, which is something I'm looking for this to get above, which would also coincide pretty closely to this 1011 standard pivot. We came down, we filled the gap up from Tuesday, so we'll see how this builds out now. We're below all the moving averages. I'd like to see it get above at least the 10 and the 50-day on an increase in volume before we get to this standard pivot of the double bottom base. Next up is Paylocity Holdings, PCTY. This one has been holding up tremendously well. We formed a nice cup base here. Volume profile is also very nice. Nice big blue skyscrapers. Lower volume as we consolidate and build this cup. I don't like that we closed below the 10-week line. However, we did have nice tight closes here, which is very controlled. Relative strength line sitting pretty close to new highs, also a positive. Okay, so if we go into the daily chart here, you can see we had this nice multi-touch trend line, which we got above on Wednesday with a nice increase in volume. However, Friday, as the market came down, this came down with it fairly hard. We ended up closing below all our moving averages. So we need to see if this can get back above those moving averages, hopefully on an increase in volume. But again, this is holding up very well. Still has this earnings gap, which we are holding. It hasn't filled that gap. Just tremendous strength here. If the market does want to find its footing or rally, this is one of my first go-tos that I would expect to be leading the way. Okay, next up is Wolfspeed. This one actually ended the week positive, and we got back above the 10-week moving average, which is very nice to see. So still needs a little time to form a proper base here, but the overall action is healthy and very nice to see. Again, we broke this previous high, which was a high tight flag base, got slammed down into this 10-week and 50-day moving average, formed this mini coil, which we broke above very nicely, getting above all the moving averages, but Friday, just general market weakness, took this down. We are still above the 10-week, which is the blue line, and the 50-day, so we'll see if we get a retest there or if we just push higher. Okay, next up is WillScot Mobile Mini Holdings Corp. This one broke out from its double bottom base this week that we've been talking about for the past few videos. You can see a relative strength line is at the new high. Volume slightly above average this week as we broke out, but nothing to write home about. If you dive into the daily chart, though, you can see that the volume on the up days this week was above average or at average, and the days that we pulled back were below average. So that's very nice to see. We're above all our moving averages. We're holding this 8 EMA, and this one is acting very well. We hit a new all-time high on Thursday. So if we come back down, maybe test this 21 EMA, that could be a spot to initiate a position if you haven't, and it gets you in below these all-time highs. So something to watch here. This one, incredible relative strength, holding up, hitting new highs this week, despite the market being right at its yearly lows. Okay, World Wrestling Entertainment, WWE. This one's holding up extremely well. We have the relative strength line at new highs. We have this very nice cup base, tight closes throughout the whole base. Positive to see, it's very controlled. We have a nice volume profile. You can see these big skyscrapers of blue volume accumulation. If you go into the daily chart, here's that same structure, very nice and controlled. We got back above our moving averages on an increase in volume, and now as we're coming down, possibly forming a handle here, volume has been decreasing. So this is acting very well, something to have on your radar if this wants to go ahead and form a nice low-risk entry. Okay, last one for today is going to be Yelp. This one has a very nice double bottom base. I like that we have the relative strength line at new highs. We also closed back above this 10-week moving average, which is sloping up, which is very nice to see. If we dive into the daily chart, again, you see the double bottom base structure. We came down, rallied up, not quite to the highs, came down, undercut the 33.26 previous low, and now we've pushed up. On Tuesday, we got back above the 10-week moving average, and we actually held above that on Friday despite the market weakness. So this one's holding up very well, getting closer to that 36-34 standard double bottom base pivot. Something I'll be watching if we can get a nice low risk entry before that pivot. Again, only if the market wants to find its footing and not just go lower. Thank you for watching. If you enjoyed this video or found any of the information useful, please go ahead and consider hitting that like and subscribe button below to stay up to date with all my new videos.